Welcome back to another episode of Small Girl Big Talk. Today's episode is kind of inspired by my personal experience when it comes to getting health insurance and also life insurance as I grew up and become an adult. I remember when I first get into adulthood, insurance is something that everyone is telling me that it's important and I should get it, but I did not have much guidance as to how to get into it or what are the things to take note of. So I brought my guest Diana over to help me to explain all these things that I did not know and I wished I knew when I first became an adult and was getting an insurance for myself. We will be talking about what are the policies that you should get as you get started and how much should you be allocating in your income budget into insurance, and say if you are someone who are dealing with mental health issues, like what are the things to take note of and how can you help yourself to get into a policy that can protect yourself. And also we are getting into my personal experience of how I was represented by an agent who was not the most honest, which is quite a sad and embarrassing story where that made me feel very stupid in my journey. But that is exactly why I wanted to have this episode on this podcast today. So I hope you enjoyed this conversation with Diana. When I first got into adulthood, no one really, my parents didn't really educate me, why you need insurance, why it's so important, all that. But I see my friends all also, talking about getting insurance. And also you have those friends who are in insurance, so they're always talking about how important it is. So that's my understanding of it. And I always know that, okay, I need to get it just for safety purpose, for a peace of mind. But I never knew exactly, how, what we need and all that stuff, how to get into it.
You know, you are actually very blessed to be in a circle where people talk about insurance because it's not a topic that people enjoy.
Yeah.
Nobody gather in a mama store and say, hey, let's talk about insurance, and none of us are agents. You know what I'm saying?
Yeah.
So insurance will never be a dinner topic if an agent is not in there or if nobody had any prior experience to it, right? So honestly, I never knew the importance. My mom just forced me to get it. And then I just say, okay lah, just follow blindly lah.
Yeah.
Right? But at every life stage, you actually need different type of insurance. And a lot of people, when you hear insurance, right, like I said, they put their guards up, the walls are up, the doors are chained, the dogs are out, right? Because no one enjoys talking about insurance, but they don't realize that insurance is actually a fantastic financial tool. So the way insurance help is, for example, most people think that, insurance is a medical card.
Yeah, that's my understanding of insurance also.
Right?
Yeah.
And if they think that, if my company covers me,
then it's enough already, ma.
Correct.
People cover for me already, ma.
Exactly. But you don't know the terms and condition. Yeah. So for example, I just met a director. He is a director, vice president of a company, of an investment company. His company insurance only covers 70,000.
Okay.
70,000 annual limit. And this 70,000, right, I tell you, cannot even cover half of his heart surgery.
Oh.
So you must see company insurance as a bonus.
Yeah.
Your own personal insurance is the basis of what you should have. But again, insurance is more than just medical. There are many, many elements to it. Life, critical illness, accident, minor accident, waiver. There's so many elements. Insurance is not just a medical card.
Yeah, so you just listed up a lot of things, right?
Yeah.
And for me, imagine now, right? I'm just fresh off university and I just started my first job now. And I'm just getting started, right? What do I look into? Do I get medical first? What do I focus on at the early stage of adulthood? Let's focus on that first.
Right.
Then we get older together and talk more about it.
So when you come out to adulthood, so you definitely do not want to be dependent anymore. You start earning. What do people earn now? Like a starting rate?
Maybe 3K-ish. I don't know. Like
3K-ish.
that's the low range is 3 to 4K,
right?
I think.
So the most basic or as where you should start as a fresh graduate is definitely a medical card. Right now we are talking about millions annual limit and it could last you until age 100. So that could be a good start. Second place also is actually a savings plan. Right? Insurance savings plan.
Yeah.
Sounds a bit foreign.
Yeah.
But as a fresh grad, you probably don't really know how to save.
Yeah.
You know, if you have 3,000, you spend 3,000.
Yeah.
Correct? Or worse, you get into credit card debts and all the stuff. I mean, we hear it all the time.
Yeah.
So learning how to save at a very young age is so important.
Okay.
So I think as a fresh grad, medical card and a basic savings plan.
So like a insurance savings plan is something that, like, how is it different from a bank's savings plan?
Right. So if you look into a bank savings plan, right, you will realize actually banks are selling insurance products.
Yeah.
Right?
Okay.
So you might as well get it from the source. That's number one. Now, the savings plan, the savings element, right, in the insurance world, you have to see it like a second EPF. So it is your own money. EPF, what is EPF? EPF is the government forcing you to save your own money.
Yep.
So a savings plan with insurance is almost the same.
Okay.
Because it is forced savings. It is not flexible. Like I can't put 200 today and then in next month I put 500. So if you're committed to 200, then it's 200, 200, 200 until the policy ends. And it is a staggering way of savings. Meaning you commit it to 20 years and then after 20 years you have a big lump sum. It's exactly like EPF.
Okay.
So it's just the habit of savings is important.
Okay. And what's the interest rate for generally like the range like for insurance savings plans?
Now, the savings plan on insurance, right? I don't know about other companies, but my companies just declared 8.3.
Oh, okay.
It's really good, right?
Hey, very good.
Yeah.
FD also like what, 3-4%?
Yeah,
only.
but then if you average out, it's about 5 point something.
Okay.
So it's still good.
Yeah, it's still a good savings
So
plan.
one thing that people don't know is in insurance savings plan, there's this thing called waiver. So when critical illness happens, heart attack, stroke, kidney failure, cancer, all that sorts, right? You probably will not be working. You probably do not have any income. But then when waiver kicks in, the savings plan, you physically paying that money stops. But then the company will pay for you. Until it ends. Meaning, like for example, investment or EPF, when you stop working, when you stop putting money in there, that's it.
Then it pauses. No?
But in insurance, it continues to go in because the company will pay for you.
Oh, okay. Okay. And like say for someone who is starting, like you can start with small amount lah.
Yeah.
Like how low?
As low as 100, 150.
It can start with that low.
Yeah.
Okay. I think that's a very good introduction.
Correct.
then.
It's just to build that habit of savings, I think.
Okay. So like say a fresh grad just started her first job. First month itself can get already, or do you need to prove your salary slip or anything like that to get an insurance?
So insurance is not like a cup or a hat where you can just go out and purchase.
Yeah.
Right? And savings plan is the same. So in insurance, age is a factor and your health condition is a factor.
Okay.
So if you are healthy, young, you should get one ASAP.
Yeah.
Because you don't know when critical illness will hit you. You don't know when, if suddenly you have a pre-existing condition and then trying to get an insurance then, although you're young, would be challenging.
Yeah. So basically, it's like the sooner you get it, the better lah.
Yeah,
Whether
definitely.
it's a medical card or a savings or anything lah.
Or whatever insurance product.
Yeah. Okay. Yeah, I think I get that. For me personally, I just want to share my story, right, about how I got my first insurance because I did not get it immediately after I graduated from university. Also because I was living abroad when I was in university.
Right.
So then when I came back now, I was like, okay, it's time to get an insurance. But I think it just wasn't at the top of my priority as I was adjusting into my life in Kuala Lumpur and like just trying to, manage my first paycheck and all that stuff, right? So I kind of delayed a bit, but also because I had a history of depression. And I think it was about 6 months into my first job, that was when I got diagnosed officially by the hospital with MDD. So immediately after that, then I know like, oh man, I know it's going to be hard for me to get the insurance. So and this was like 2017. So I did not even try to get I just assumed that it would be very hard to get. And I think I'm right? It will be harder, right? Especially if you just got diagnosed.
Yes.
Yeah.
So in insurance, right, we always say prepare the umbrella before it starts raining. Right? But because when we're young, we always feel like we're invincible. We, sickness is not going to come to us. We're going to live a great life. No accident, no nothing, no critical illness. We're all good.
Yeah.
Because our future is so bright.
Yeah, because we were young and invincible. Like
right.
You said,
so I think like the right word is just invincible, right?
Yeah.
So most young people will not think about insurance. But when things happen, right? Like for you, it was the depression. With others, it probably were a sickness, physical disability or whatsoever. So that makes it very difficult because, like I said, you need young age and good health. So when health is compromised, so there's only two options, two outcomes. Oh no, technically three outcomes.
Okay.
So the first one is you apply and then they reject you straight away. So they say, sorry, because insurance is a profit-making company. They are not a charitable company, correct? So they take calculated risk. So this calculated risk, right, is, okay, if I see your condition, if your condition is, I think I can afford to take a gamble on you, sure, I will take you on. If that risk is too high, if that depression diagnosis is too new or too fresh or too severe, it will be a rejection.
Yeah.
Right? So that's one. Second one is it would be an exclusion.
Okay.
Exclusion meaning, sure, again, it's calculated risk. So yes, I will, if Mr. A has a history of, cancer, like lung cancer or whatever, right? So, or a preexisting condition. So it will be an exclusion, meaning the company will cover everything in that person's body except that part.
Oh, okay.
If he's got cancer at the same exclusion, you will not be able to use the medical card.
Okay.
So exclusion. And the third one would be loading. Loading meaning if a normal person is paying $100, because the risk of covering you is higher, I will still cover everything, but you have to pay more now.
Okay.
So there's only three outcomes.
Okay, but that's that option that they still cover you, but you just need to pay the premium of
Correct.
that lah.
So you pay higher than everyone else.
Okay. So that's that. Yeah. For me, I think it was 2 to 3 years after I got diagnosed.
Yeah.
I got connected with my high school friend who eventually helped me to get a policy. And I'm very grateful for her because she really helped me through that process. She helped me to go to the hospital to get the letter from a doctor to say that, I'm really okay and I can be covered under insurance and all that.
Yeah.
And I'm eternally grateful for her.
Yeah.
Like she really helped me to fight for it. And that's how I finally got my policy, only 2 to 3 years after I started working, which I would think it's considered late already.
Right.
I should have started earlier, but at least I'm very grateful I get to get a policy.
Correct. And so for example, your example of your friend, I can say this friend is a fantastic friend because not all agents is out to get you in. Some agents are really genuinely trying to help you out, trying to make sure you get the coverage that you need. So not every agents are bad, although we have a bad rap, suddenly your friend calls you oh, are you free for coffee? Did you go into insurance or something or MLM?
It's always like that. There's always people who kind of bring in the bad reputation in the industry.
Yeah, unfortunately so.
But we both know that
Yeah.
it is something that is very, very important to have in your life to prepare you for the time where you really need it, basically.
Correct.
Yeah, like and for you, it's the example of your father who was unwell, right?
Yep.
Yeah.
So like my dad, he had a stroke. So kidney stones and then stroke and then fourth stage cancer. So when I became an agent, I couldn't top up his medical card anymore because he already have those pre-existing condition, right? And when his insurance expired, we had to go to a government hospital, and we are very grateful
Yeah.
still
Yeah.
in the government hospital, but ultimately it has its own challenges. The waiting time, the huru hara, the kelang kabutness of things, right?
Yeah.
But ultimately, insurance is just giving you an option lah.
Yeah.
And you need that lah when you are not well.
Yeah, and like, so I got my insurance like say 2019 or 20, and where I had my first hospitalization like 2 years ago,
Right.
when I had a kidney infection, and oh my god, that was so scary.
Right.
So it started off with UTI first,
Okay.
and then I went to a doctor, took antibiotic, and I thought it was cleared. I thought it was treated, and then I went on to go on a holiday to Penang. And then midway through my holiday, I suddenly had high fever. And then it was first day, and then second day I was still sick, so I went to a doctor. And since I was leaving the next day already, I thought it was okay. Doctor gave me an injection, fever went down. But that night itself, my fever still went up to like 40. It was very bad. And I knew like something was very, very wrong. And I was very scared. But the fact that I knew that I have a medical card already, it gave me a peace of mind lah. I mean, I still went to a clinic first, and the doctor is like, "You have medical card, right? Okay, I'll get you straight to the emergency ward. Like, just go into the hospital. Don't be worried." And it was such a peace of mind knowing that I think for my package or something, I just need to pay like 300 ringgit or
Correct.
something, and then everything else is taken care of.
Yeah.
And thank goodness and I think the bill went up to 10K. Yeah, and imagine like if I don't have a medical card or anything, right? Of course, I have the option to go to like public hospital, which is affordable. But the waiting time, I don't think I'll be getting treated like immediately already. I think I was hospitalized for 5 days.
Wow.
Which was quite long
Yeah.
for someone who has not lived in the hospital for any like ever since I was born.
Yeah.
It was really scary. But I remember at that point, I was like, wow, very, very grateful that luckily everything taken care of. I already have a medical plan already.
Yeah. I mean, it's when you need it, that's when you realize, oh, I need it. So like for you, you are very fortunate enough for your friend, right?
Yeah.
That got you the medical card approved. And then when this happened, and it was a kind of smooth transition, right?
Yeah.
Where you can just go into the hospital for 5 days, and then the insurance company takes care of the bill for you.
Yeah.
Right? But when people are not prepared, when people don't have insurance, right? And then they still want the luxury of a private hospital, they still can. They just have to pay up front. No? But I cannot imagine a 20-year-old coming up with 10,000,
Yeah.
right? And that just, I don't know, maybe some 20-year-olds can save 10,000.
Yeah, but it's a very big but I couldn't lah. I mean I could, but like all of my savings will be gone lah.
Exactly.
And then I would have to rebuild everything again.
Yeah, means the however many years that you've been working is down the drain in one episode.
Yeah.
Or you become a dependent again. Mom, dad, I need help. I'm in the hospital. I need 10K.
Yeah.
And we don't want to do that to our parents.
Correct.
So
Yeah.
getting an insurance is really just a responsible way to live, to go into adulthood, so that we don't become dependents. We can take care of ourselves without draining our own bank account.
So we were saying about how like this is so important, right? And I think that was when I also realized like, okay, this is important. But I also know that, you know, the amount that you pay kind of need to be topped up as time goes, right? Like, so I think I want to ask you is like, how often would you advise someone to review their policy?
Okay.
And how do we decide like what's the right amount for us at this stage of our life?
Right.
Yeah.
So when you purchase a policy, that amount whatever amount that is, right? It will not stay that amount forever. So there's this thing called repricing. So every insurance company will go through repricing because we are all financial institution, and we are all governed by Bank Negara. So when the cost of medicine increase, the cost of insurance must increase. So after a couple of years, there will be repricing, but repricing should not be so ridiculous until it's double or triple. So it has to be reasonable. How often should you do a policy review? To be honest, you should do it every year.
Okay. For me, it's like, do I need to pay this much, or like even increase my budget for insurance or not? Like,
So when you do a policy review, it doesn't mean that you need to top up every year.
okay.
You just need to remind yourself, okay, so this is my coverage, how much. Because honestly, when we explain it to you, to any of our clients, nobody is going to remember it one.
Yeah,
and
correct.
it's completely normal.
Yeah, look at my very guilty face. Actually, as I'm talking to you now, I forgot what's my coverage already.
Right?
Yeah.
Nobody's going to remember it, but it will be a good reminder every year. So every year, yes, do a policy review with your agents. But remember this, always try to schedule your policy review a month before your birthday. Because after your birthday, like for example, if your birthday is in September, your review should be in July.
Okay.
Because entering the month of September, the cost to cover you would be different.
Oh, okay.
Yeah,
So
so
that's a good timeline to adjust. Like
Correct.
about 2 months-ish before your birthday.
Yes.
Would be a good time.
Correct. And these policy reviews, sometimes it's just a reminder of what I currently have. It doesn't mean I need to top up or anything like that. But if there is a gap, yeah, definitely. If you can afford it, go for it. How much to top up? Yeah. As a person who is a fresh graduate, your needs will be different from, say, someone who is married with 2 kids. Because your commitment is different, your dependent is different. So for someone who has a big lifestyle change, life stage change, they get married, they buy a house, they have kids, their parents are ill, and then suddenly their parents become their dependents, then yes, it's time to top up.
Okay.
And I'm not talking about medical insurance, I'm talking about life and critical illness insurance already.
Okay.
So as and when your life stage change, meet with your agent, say, hey, you know what, I just bought a house, I'm expecting a baby, my parents are sick, can I just do a review?
Okay. Even if I'm getting married also, I should lah.
You should, because
Okay.
it's two becoming one.
Yeah.
It's a life stage. Yeah.
Okay. Yeah, I think that's a very good guide. Like, I actually did not know like the whole birthday thing. That's very new.
Yeah.
Hope you guys are reminded too to actually check in with your agent about that. So we were talking about how often we should be reviewing our policy, right? Then my next question is, how much money should I be paying for my insurance?
So everybody has their own budget.
Yeah.
Right? So there is no package A, package B, package 3. So everything should be customized to your needs. And if your budget, if you are willing to commit, for example, 200 monthly, then that is your budget lor.
So it should be based on my own budget.
Correct.
But what would be a general rule of thumb?
A general rule of thumb should be 10% of your monthly income.
Okay.
Yeah. So that if 10%, we can cover quite a bit. But again, it comes back to what you're willing to part with. Because insurance is protection, right? But it shouldn't be a heavy burden. So it boils back to what's a comfortable budget. Because we don't want, like say if financially struggling, we don't want insurance to be the first thing you drop. So rule of thumb, it should be 10%, but ultimately it's whatever you're comfortable with.
Okay.
But then don't be...
Too stingy.
It's how to say, what you pay is what you get lah. If you can set aside 100, then we can customize it to 100. If you can pay 1,000, then we'll customize it to according to your need. So it's a need-based thing.
Yeah.
Yeah.
And of course, like if say I have kids and all that, then I should be paying more. I should be allocating more budget to insurance.
So
right?
if you have kids and all, right, means you have dependents, right? So you should allocate. It's not about allocation then. It's about protection. So meaning, how much do I leave for my children? Because financial planning is also about legacy planning. It's also about, like I said, preparing the umbrella before it rains, right? So how much is enough for our kids? Honestly, if critical illness were to hit today, do I have enough to send my kids to school or not?
Wow. How do I know this kind of thing?
That's why it's never enough.
Yeah.
But again, rule of thumb, it's protection-wise, life coverage, it should be 5 times your annual income or 10 times your annual income. And there is a reason why one.
Okay.
So this rule of thumb is not like we pluck the number out of nowhere.
Yeah,
one.
can you explain to me what's the logic? Like why?
So say for example, my husband and I, we have 2 daughters, right? And I'm the main income source. I'm the breadwinner of the family. Say for example, touch wood, very unfortunate, I have a critical illness or I pass away. And then there is a lump sum of money that goes to my family. Now, how much is enough? Honestly, we don't know. It's whatever we can afford. But I know if I am no longer around, I know my husband will struggle to look for help, to find stability, to find back the income. It's an income replacement.
Yeah.
So at least I know, although I'm not physically here, my family have 5 to 10 years of my annual income to help them sustain for the next coming years. So that they don't have to mourn the loss of a person and their lifestyle and the income.
Oh, okay.
You get what I mean, right?
Yeah. So it's between 5 to 10 years ish.
So at least whatever that I'm leaving behind, it will take things off their mind. They can focus on something else.
Yeah.
Finding stability or having options, whichever lah.
Okay. Yeah. Wow. Like talking about like say if you were to go, I feel like today we talk about like a lot of the what ifs that could happen in life that we all fear for. So we talk about kind of like the importance of like medical card, critical illness and like life insurance, right? Are there any other policies that I don't know that are such things that you feel we should all know and actually make good use of?
So because of my personal experience with my dad, he has cancer and he had a stroke. All the aftercare, the food, the different checkups, the fact that he was so sick and tired of Western medicine, he wanted to try something more holistic. All those are money.
Yeah.
Right? And however medical card, they cover you until millions, that's fantastic. But then that millions, if you understand how insurance works, is insurance company paying the hospital. You get nothing on.
Oh, yeah.
Right?
Yeah.
So what I'm most passionate about is actually critical illness coverage.
Okay.
So when critical illness happen, heart attack, stroke, kidney failure, cancer, all those sorts, right? You have a lump sum of money that goes directly to your bank account.
Okay.
So meaning, if you want to eat healthy, eat organic, you want to seek other types of treatment, you have that options because you have money in your bank account.
Okay.
So I have a relative, no names mentioned, right?
Yeah.
He is a very young guy in his 20s, gym, buff, healthy, and one day he just felt pain. And then he went to check, and then turns out it was testicular cancer. So he couldn't work for 2 years because he was going through chemo and all those stuff. And chemo, it's intense.
Yeah.
Right? It kills your cancer cells. It also kills your healthy cells. So it's really intense. So what happened was he has this medical critical illness payout. So this payout, right, covers his rent, covers his car finances, cover all his different food, healthy supplements and all those stuff.
Okay.
And on top of that, a bit of savings so that he can sustain 2 years without working
Wow.
because bills still rose.
Okay. And so this is like critical illness insurance.
So this is critical illness coverage.
Okay.
So to me, critical illness, I mean, most of everybody already have a medical insurance, right?
Yeah.
But most don't realize insurance is more than just medical. So please look into critical illness coverage.
Yeah.
Yeah.
Okay. Well, I didn't know. Yeah. I mean, I knew you explained it to me before, but like, yeah, actually, to think about it, right, I didn't know that medical cards usually just pay directly to the hospital and there's no other payouts.
Correct.
Because I've been fortunate enough that I've had critical package. Yeah. Thank goodness. Okay.
Yeah. And there are a lot of types of critical illness coverage. So if you check your policy correctly, anything that is malignant means if it's cancer, stage 3, stage 4, then you get the lump sum payout. Most coverage, most companies. But the one that I am very, how to say?
Advocate kind of thing?
Advocate. Is it covers stage 1, stage 2 as well. So before it becomes malignant, you have a lump sum as well. So, and multiple times. So I feel that kind of coverage kinds of 360 the whole
it takes
experience.
It takes full care of you and everything else also.
Correct.
Okay.
So that is one thing that I'm very passionate about.
Okay. Anything else?
And life, because you don't want to leave debts.
Yeah.
You want to leave a significant legacy for your family.
Okay lah. Yeah. Okay, I feel like we've had a good coverage of like the different coverage, good coverage of different coverage, like different kind of insurance and all that, right? I do want to touch on the topic of insurance agents.
Sure.
And I want to talk about it because actually that's kind of the story of how I first met you also.
Yeah.
And this is a story I really want to share with you guys because that's the whole reason I'm bringing Diana into this episode. Because I personally had the experience of not having a very honest agent taking care of me, or should I say not taking care of me. And in fact, that was actually just, I think I met you 2 years ago.
Yeah.
Yeah, and that was right after I got hospitalized for the kidney infection thing. Because at that point, my previous insurance agent, who is not my high school friend, by the way, it's someone else, like this agent already immigrated to another country.
Right.
Migrated to another country, and I felt like, okay, like it's time for me to actually find someone local. And I was introduced to you by Sarah, my church member, right?
Yeah.
And she said like, you are memang based here, so it's someone that I can trust lah. So I was like, okay. So I met up with you at Coffee Bean.
Yes.
I remember, and I'm sure you remember that day because it's such a story, you guys. So I remember coming to you and telling you like, I mean, just like everyone, we forget about what policies we really have and all that.
Correct.
But I remember coming to you and saying that, okay, I remember I have medical card, I have life insurance, and I have a savings plan.
Right.
And I remember your face when you look into my profile and you paused. And you were like, there's no savings plan in your account. And do you want to go on? Like, how did you remember that moment actually?
So when you told me you had a savings plan, you have a medical card, you have life, I was like, oh, okay. So you know what you have.
Yeah.
So let's go through it.
Yeah.
So we went into the system, we saw what you have, and I was writing down like a summary for you. And I was like, there's no savings plan here.
Yeah.
Right? And then I wrote down everything and I remember it so clearly because as I was explaining to you what you had, you literally just like in shock, in disbelief, and ultimately like you burst out into tears.
Yeah.
And I felt so sad for you because I don't know how things were when you purchased, but I know what I see.
Yeah.
And what I see, there is no savings plan.
Yeah, so I think I was being sold a savings plan, you guys. I was being sold and told that, okay, you should get this plan and it will be a very good savings plan for you for the next 10 years. I think it was a 10-year insurance plan.
Right.
And I was told that every month I just need to put in a fixed amount and there's a guaranteed about 8% kind of growth kind of thing. And I was like, oh yeah, that's a good savings plan. And at that point, because I haven't learned much about investment or anything, so I thought okay like a forced saving I
Right.
thought that would be good for me. So I committed to it. And actually it's because I chose to commit to a bigger number also. I think it was 500 ringgit every month,
Correct.
which it's bearable, I can achieve it, but it's a little bit on a stressful side already. Because but I was thinking, okay, it's savings it's money that I can eventually take out and grow
Yeah.
so it's okay. But then it turns out that it wasn't a savings plan.
Okay, so it wasn't a savings plan, but just wanted to clarify.
Yeah.
It was still a good plan,
It's a good plan, yes.
right? It was a life and critical illness plan. It was just not a savings plan.
Yeah.
So the way you understood it may have been misled, but nonetheless, it was still a good plan for someone who has dependents, who has a house to their name, who has, when life happens and then there's a big amount that comes out, that cash out to the family. So
Yeah.
it's still a good plan.
Yes.
It's probably not what you need at that time.
Correct. I did not have dependent. I did not have a house. But I remember what you explained to me. It is a savings plan for when you are not around. It's not a savings plan for you to enjoy,
Cash
to
out.
reap the benefit of.
Yeah.
Which I thought that was what I got when I got into it. Yeah, so at that point, imagine I think spending 2 to 3 years just every month committing to this savings already and expecting that, in 10 years off, then I can take out and use it, and maybe buy a house or whatsoever, right?
Right.
And then suddenly I was told huh? What do you mean it's not? And remember my eyes just started tearing up and it was in the middle of a coffee shop. I just met you for the first time.
Yeah.
And then you felt, I felt bad for you, but you understood.
Yeah.
It was such a situation.
Yeah, I mean, honestly, I felt for you because just like a lot of people out there, they don't understand what they have. And just like a lot of people out there, they don't remember what they have. I'm not saying that you don't remember. You obviously do, right?
Yeah.
That it was in your mind a savings plan. It just really saddens me that you were led to think that way, thinking that it was something else.
Yeah.
Yeah, but like I said, it was still a good plan.
Yeah. Yeah, it was a good plan, but I think it was a bit scary for me at that point because on top of this plan, right, there was also another annual plan
Yeah.
that I did not know exists in my account.
Yeah.
It's a very small amount and I don't remember paying for it the first time. So probably my previous agent just kind of put a policy on me and he paid for it for his own benefit or whatsoever. So it shocked me that there were things in my profile that I did not know about. So that kind of really shook me up also and realized that, you really have to find an agent that you can trust.
So it all boils down to an agent you can trust.
Yeah.
Correct?
Correct.
So I personally, I feel there may be some red flags to look out for.
Yeah.
But I think generally people are good one.
Yeah.
I choose to see the good in people,
Yes.
right? So let's talk about some red flags,
Yes.
right? It may not be their intention. Maybe they were trained wrongly. Maybe their understanding was also swayed that way. So we don't know where the root of the cause is.
Yeah.
But I feel a good agent will really sit down with you and explain in full until you can understand fully. And ultimately, right, all these plans, right, is backed up by documents one. So if you don't trust your agent, you can always go back to your documents and read the black and white. And I would always encourage my clients to read it.
Yeah, but it's so confusing.
And it's so thick, right? But ultimately, it's just something that we have to do. Okay, maybe we don't read it page for page, right?
Yeah.
And another one, I feel, me personally, I will never ask my client to surrender a policy.
Okay.
Because if surrender a policy and purchase a new one, there is the incontestability period.
Okay.
So this incontestability period is this 2 years, right? Where when claim happens, the company has the right to investigate.
Okay.
So, and then there's waiting period, which is usually 120 days. So at any time you surrender a policy and buy a new one, there is a gap of 120 days. That's number one. And then if there is a big claim, then it's another 2 years of incontestability period, right? And then if the company managed to find
something
and it's not declared, then it will be null and void. So it's not good for you as a client, as a consumer.
Okay. Yeah. Sadly, I also got advice to surrender my policy also from that previous agent. So you guys, you see, I mean, like at that point, I went to that agent because it's someone that I thought I can trust lah. So do take note of these red flags, because even if someone is your friend and you want to support them, which is quite common for people, like that's how they get connected to their agent.
Yep.
I think it's still important for you to figure out what's your friend's intention in doing insurance. Is it truly is it truly to help people like the way you do? That is why I'm still connected with Diana now, because she's really very passionate about helping people in this journey. When I got connected with Diana, I don't think I even helped you make any money. I think I brought you more trouble only because of all this policy revision and all that stuff. And I felt very bad, but she was so genuine in helping me. But yeah, like if you have a friend who is an insurance agent and you're thinking of helping, I think it's important for you to kind of figure out, like, are they just in it to make the money, to build the name for themselves, or are they truly wanting to help people? And in fact, I feel now that I got connected with you, right? We were not very close friends or anything. We are just friends of friends. And I feel very comfortable about it because I feel like sometimes too close, maybe it's even harder to ask questions and all that. And I felt like we are able to keep it professional in a way that you are able to advise me very properly, and it's nothing too awkward or anything. So like I would suggest for you to even go for a stranger that you know you can trust also. So I guess like in a way, I think I've kind of covered everything that I wanted to cover today. Is there anything else that you kind of wanted to share in this episode but we have not gotten into yet?
No, I think this is comprehensive.
Okay.
Yeah,
I think we had a good chat. And so I guess in that note, if you guys have any more questions about insurance and you want to ask Diana, you can reach out to her on Instagram. She did not come into this wanting to sell insurance or anything. I'm the one who actually had to convince her to hop on, to face her fear of like being in front of the camera and hop on, because she has helped me a lot in my journey to understanding what I need in my insurance policy journey and all that stuff. And I mean, she had to deal with like my breaking down of my previous, I would definitely say irresponsible agent. I know you would feel very sensitive about it, you feel bad about it, but that was truly my experience, and that's why I really wanted to have this episode today.
Thanks for having me.
Yeah, so thank you so much for coming. I'm really, really grateful. Please visit her on Instagram if you have any other questions. I'll leave her Instagram handle on the show note. And yes, I guess we'll see you in the next episode. Goodbye. Thank you so much for tuning in to this episode. I hope you enjoyed our conversations and that you find it valuable. If you do, please do share it into your Instagram stories or share it with your friends and family so that we can help as much people as possible when it comes to dealing with their own insurance journey. And with that said, please give it a thumbs up on YouTube or give it a 5-star rating on Spotify, and I'll see you in my next episode. Goodbye.